foreign portfolio transactions on the Nigerian Stock Exchange fell by about 90.9% in April. It's raised a lot of eyebrows. There's been a lot of talk around this report, which of course is from the NGX Domestic and Foreign Portfolio Investment Report of the Nigerian Exchange Limited. We're happy to have Robert Omotunde, who of course is the Chief Investment Officer at Afrinvest Asset Management, to get into this transaction. Robert, it's good to see you again.
Thank you very much.
Welcome to the show. Welcome.
My pleasure.
So looking at the data, I want to start with total transactions, declining by about 56%, I think, month on month in April, but appreciating by about 32% year on year. I think the figure was 482 billion. What's your takeaway from that dynamic in terms of those numbers for April?
Yeah, so thank you again for having me after a long time.
Yeah.
So, I think that the foreign portfolio investment into equities, as it is right now, it's better we analyze it by looking at the March figure.
Yeah.
It was an outlier. If you check, before March, what we've been seeing, it's a situation where the domestic portfolio investment, the domestic investment, is dwarfing what the, portfolio investment is. So March was an outlier, right? But coming into April, it seems to have normalized. Several factors could have been, responsible. What I look at is the global macro picture for Nigeria, from the perspective of, Nigeria being a good, whether it's a good or better investment destination relative to other African countries.
Yeah.
The different issues we've been dealing with, even though it looks like we are stabilizing now from the perspective of currency, into other macro issues, inflation moderating thanks to base effect, and maybe several other things that the central bank is doing. It's not out of the place to look at what our domestic equity is offering now and check what returns investors would expect, which of course will then influence how much of that they want to benefit from.
Right.
And I think that is what, March could have also been, typically when people want to come into Nigeria, and wants to take, let's say, an equity position, right? They will possibly want to identify certain companies they want to come in through. And if the company is already listed on the exchange, the tendency is that they will cross trades, on the bourse, like on the floor of the, NGX. But the way it is done is typically different from the normal transactions, and you will notice that most foreign portfolio investment could come by way of block trades.
Right.
You understand? So where, trades have been negotiated, they just cross it on the floor of the exchange. I want to believe, because we don't have the full picture,
right,
of what happened in March. But if you look at the trades, this is a report that is summarized, maybe not broken down into domestic and foreign every week.
Right.
But the NGX will typically show us which of the houses are responsible for the volume and value of transaction at the end of every week. They also report that at the end of every month. So if you see, in March, for example, if I investigate, there's a possibility that some of the, brokerage companies that are more tilted towards foreign portfolio flows are more likely to have taken the day, which is why you're seeing that large transaction that happened in March. So for me, what happened in April was just a normalization. But again, if you analyze it from a year-on-year perspective, it looks like the overall data improved, though when you now are specific to foreign portfolio investment, that's when you then see that that difference.
In fact, and that's so for anyone so you're saying nobody should be, if we now go to that 90.9% decline now for foreign transactions, you're saying that people shouldn't be too up in arms about it, yeah?
Absolutely, that's what I'm saying, because again, March from the trend, if you look at January, you see January contributing about 11.7%, go to February 8.3%, March 62.74%, right? And then in April, you're down to 13.08%. So in my opinion, March is the outlier here. The general thing to note is that maybe we've not been able to attract foreign portfolio investments as much as we should into the country, and it's sometimes we can explain this. You know, some 3 years ago, the exchange rate was like about a third of what it is now. You know, so now you need, slower amount in dollar terms to inflow into Nigeria to buy into our equity. Then you can also analyze it without looking at the valuation of Nigerian equities as it is, for foreign portfolio investment, which is hot money as we call it.
Yep.
If they will come into Nigeria, they want to see what are the benefits. And I look at the price to earnings ratio across markets. You look at Nigeria compared to Kenya, compared to Ghana, they seem to be almost evenly priced, between 6 to 7 times. The outlier I saw was Morocco, which was clearly an outlier, in that space. So Nigeria may be considered a fairly priced equity at the moment, such that investors would not see much. And, you won't come into the market if you don't anticipate that you will have some very good gain. Quick gain, I would say, so that you can come in and then quickly go out, as the case may be.
When Arise News went to Morocco, my first time there, I fell in love with Casablanca.
Oh, yes. Casablanca is good.
Beautiful, beautiful city. Okay, the block, what are block, you think you touched on it a moment, just for our viewers, with these foreign portfolios or other investments falling, what are block trades? What is the purpose of block?
Okay, so block trades happen majorly when transactions are negotiated outside of the typical market. So, Nigerian exchange is technology driven as we speak, so people buy equities from the comfort of their home, offices and all, on their phone, their mobile, their laptops and the rest. So typically, if you go on the platform as we speak, market is on. If you go on the platform, you could buy or sell, and you're likely to buy in, consonance with the trend in the market. There are rules, there are queues, you come in, you wait. If there are no queues, you buy at the market. But sometimes when you want to do block trades happen when you are buying volume. So imagine you want to buy 500 million, worth of a bank shares. Most banking shares outstanding is in the region of 30 billion, or sometimes less, sometimes more. So 500 million could be considered, somewhat sizable. Such that you may not be able to get that on the floor, or if you queue to buy that, you can actually, move the market.
Right.
Either way, depending on whether you're buying or selling. So typically, what block trades are meant to do is to negotiate that trade. And this will typically happen among brokers, right? They will negotiate. I'm looking for 1 billion unit of, say, Dangote cement, right? So you would need to then negotiate that trade outside of the market. But at the time when you're about to trade, on the strike price that you have both agreed, you will cross that trade in the market, and then it happens. Fantastic. So what the NGS was saying was that we didn't see as much block trades, which technically is saying we didn't see as much portfolio investment, coming into the market. So that typically that's what block trade is. It's negotiated outside of the market.
Hey, that's stock market 101. Solid breakdown. Thank you, Robert, for that. What do you make of this? You mentioned it earlier, the domestic investors just overwhelming I think it was 87% to 13 or something. What does that, any takeaway from that? Is there any reason to?
It's not particularly good or bad, in my opinion, and why do I say that? It's good that we are able to also mobilize domestic savings, because it's the monies that are saved that then come to invest, either in the stock market or in the fixed income market. So if the level of domestic savings is low, then you typically not see as much participation in the market. But the situation we are having now is not so much of, more investment coming from the domestic market. It's just because you're not seeing as much flows by foreign portfolio investments. If you look at the April figure, where we are recording barely 65 billion naira of transaction compared to, overall 482 billion transactions that happen. So it's not so much that the domestic investment has increased substantially, not that it hasn't, but that the fact that we've not seen more of foreign portfolio investment coming in. That's why I said it's not particularly good or bad. What we will like is for us to have both happening in good proportion. And when I say in good proportion, it's not really, for instance, if foreign portfolio flows into equities, overweight what domestic investors are putting in there, it doesn't really mean that the domestic market is not doing well. It could be that more investors are comfortable with other asset classes other than equities, if you understand what I mean. Yeah, so you could argue that, okay, we have some of those other asset classes playing on the NGX, fixed income and the likes, derivatives and the likes. But again, the bulk of fixed income transactions don't happen,
right,
you know, at the NGX.
Yeah.
So that's why I said it's not particularly good or bad, but a good mix. I mean, clearly we have an issue here where foreign portfolio investment is not as attractive as it used to be, you know, and it is also clear because, again, in the global space, you look at, you know, global equities and, you know, you can't also dissociate our currency situation from, you know, all of the issues. So, but by and large, I think that Nigerian equities have always been, you know, attractive, I would say, to foreign portfolio investment. But again, value is of the essence here. If I'm not going to get as much value coming into the market now, why come now? You know, so which is why you probably saw that outlier in March. Somebody probably spotted some value or taking some strategic position in any of the Nigerian equities. You never know.
Gotcha. Fantastic. What about the breakdown of institutional investors to retail? I think it's 57 to 43. I mean, do we want to see more institutional investors in our markets compared to retail, or how?
Again, it all boils down to flow of capital,
right,
and the structure of it, right? So, I mean, you look at the overall economy and how, you know, I mean, the population, the bulk of the population still, you know, has to spend a lot of their flows on food, because of high food, you know, prices and the likes. So the tendency that you will still see institutional investors who probably just want to take advantage of, not take advantage now, I mean benefit from whatever opportunities that exist in the market, you know, we are still likely to see more of them until such a time when, apart from, you know, the investor education, which we will talk about, you know, maybe at another time. The most important is, do people even have the flows that can buy into equities? And then if you do, you then have to start checking people's risk appetite. You know, if you're saving your, as they will say in Nigeria, kobo,
right,
it's the equities, you want to put it, you know, at the start, or you want to build it up to a point and then allocate a percentage to equities. So we are still likely to see all of these, you know, I mean, the institutional investors overshadowing the retail investors. It's just the way the Nigerian economy is currently structured.
Makes sense. Speaking of makeups, the NGX market cap of about 69 trillion. I think that translates to about $43 billion. Compared to South Africa, where the Johannesburg Stock Exchange has been going about between $1 trillion to 900 billion. How do we grow our own market to increase size?
It is a long journey.
Yeah.
You know, we've been at this for a very long time. So sometimes, I mean, if you are the NGX running the market and expecting that, oh, one day you will hit a $1 trillion, you know, market capitalization, right? You get kind of discouraged when all of a sudden you saw your currency plummeting by 50%. Because what that means is that whatever journey you have achieved or whatever you've achieved, you're going back to the drawing board. I think that currency thing is a major issue because in numbers, right, you could see that we've had some quantum leap in Naira terms, in terms of market capitalization. But imagine today that Naira exchanges, you know, 500 Naira to the dollars, which was the case some 3 years ago, at least, or 2 years ago at the official market. You know, the number automatically improves. So it doesn't matter what the NGX is doing, you know, it just looks like currency issues are also, and you know, that currency is major because look at Nigerian, I mean, neighboring countries to Nigeria, just take a sample of neighboring countries to Nigeria. And, you know, I was looking at Cameroon, and it looks like the exchange rate, you know, was just about, I think, 500, 600. Right, Nigeria is still the highest. You know, some people have tried to analyze our currency from that perspective to say, if you look at the neighboring economies to Nigeria, we don't have any business having 1,600 Naira as our exchange rate, Naira to the dollars. You know, so that is also part of the reason why you will see, you know, that we are still far away. And I dare say that it's still a long journey. I mean, look at it. $60 billion to $1 trillion. It's going to take a while.
Big gap. Return so far this year about 6.7%. I mean, last year was at 36 or 37 or so. Do you? I mean, this is already the month of May, or at the end of May, practically. We're going into half year now, June. Do you see the returns staying in single digits or possibly hitting double digits at the end of this year?
I don't want to scare the market, but there is this cliche that says sell in May and go away. Please don't do that.
You nailed it, Susan, in the month of May.
Please don't sell in May and go away.
Yeah, don't do that. So I want you to keep staying in the market.
Yes, you should keep investing in the market. But what I think is that if you look at it, dimension it, it looks like the banking sector, consumer goods, and a few others have driven majorly the returns that we have seen this year. So the point is, will this be sustained? It's also a function of valuation. Right. So people will tend to look at, which of these sectors will, still have a good outing. So for me, when I look at consumer goods, I want to probably underweight on it, given the returns that we have seen so far in the year, and then look at some other sectors that you can still deploy flows into. Naturally, banking comes to mind because Nigerian banks seem to have proven to be acyclical, meaning, now, naturally, that's not how it should be in developed climes. But in our space, it looks like whichever way the economy is growing,
the banks
are doing well. So you may want to pitch tent with some of the banks, at the moment. But that this return, you can't really say that it won't be sustained. That means if you walk by what we have seen so far, we should be expecting about a 12% return or 13% return before the end of the year. But equities market don't work like that.
Exactly.
So we could still close as high as 30% or 50% before the end of the year. It all boils down to opportunities that people are able to spot between now and the end of the year, because people price in valuation. For instance, if you suddenly hear that a Nigerian bank is acquiring another bank, Nigerian investors will begin to think about what the synergy will bring to the table and then price that immediately. It's amazing. So those are some of the things that investors will look like. So we are still going to have news flow that we have not, we don't have at the moment, that investors will still want to digest as these flows come in and then price the market appropriately. So I think those are the factors to look at before the end of the year.
This is why you're the Chief Investment Officer at Afrinvest Asset Management. Robert Omotunde, always a pleasure. You're a busy man. It's lovely to have you every other day talking about the markets. Thanks for your knowledge and wisdom. I appreciate it.